All right, what's going on, guys? This is Michael Jones from the QuantVue Discord community, better known as Iceberg, and I wanted to bring you guys another video here about strategy and learning and uh, doing the best that we can to optimize every trade that we take, whether we're on the S&P 500, better known as ES, or the NASDAQ 100, better known as NQ, gold futures, Dow Jones, better known as YM, just whichever future instrument you choose to trade. We just want to make sure that we're always providing you guys with the best possible tools available so you can um, trade your best. So you can have, green days and less red days or not as many red days. And most importantly, for trading, keeping your confidence high, being optimistic, not letting the market, beat you up, because it can do that if you don't have your best trading days, right? If you have a strategy and you have things in place in terms of how you think you want to trade, and for some reason trades don't go your way, that's what we're here for. We want to provide the tools that are necessary as well as the strategies so we can keep our confidence high, keep our profit and loss tabs green. And so, what I wanted to talk with you guys out today is I've gotten quite a few questions, whether it's in the public or Pro Lounge Discord channels, as well as direct messages related to stop losses. There's some people. Um, I would just say that they, have the strategy in place, whether it's the strategy that I use, whether it's other strategies that QuantVue has published, and they see what they should do, and entries are placed, and for some reason, I used to say it back when I first started, that the market was picking on you, right? You take a trade, and you feel like the moment you take it, price, goes right to where your stop is, stops you out. You take whatever loss that you take, and it feels like it happens over and over again, and it can be overwhelming and frustrating. And I get that, right? So I want to talk about um, entries, but more specifically, I want to talk about stop losses. And there's a couple of tools that within the chart that I use that will help give you a guide as to where your stop loss should be if you're using my toolkit for scalping, or if you're just using, whatever other chart, or if you've customized your own chart. So I wanted to highlight two specific things. I want to highlight Q line, and I want to highlight Q cloud. Um, for definition purposes, Q cloud, um, it allows you to target precise entries and exit points. And with Q line, it gives you, of course, you all understand this, it gives you the trend to chase, or the easy trend to identify, because when sell Q line appears, the dark blue and light blue line bends downward. And when buy Q line appears, the dark blue and light blue line appears upward, giving you direction of the new trend that forms. And my personal viewpoint is that whenever those things happen, you should only consider um, trade opportunities that identify with that trend. So you're in alignment with the trend, even if the trade that you take goes against you, right? At least you're doing everything that you can to stay within um, the direction that the market is going. So just for a timestamp, it's currently September 3rd, 2024. It's 11:18 Eastern Standard Time. And currently, right now, market is trending heavily downward. So, um, in combination with pre-market and market open, we're just at -2% for the day, or just over 400 points on the NASDAQ 100. And as you can see with ES here, we're at 1.37, YM 1.14, gold futures 0.67. Everything is pretty negative except T bonds, which is just 0.75%. So it's It's a pretty red Tuesday, to say the least. Toolkits that I'm going to use is everyone knows the standard details. We have the freebies, the Oracle reversal and squeeze relaxer. We have Q Pro, the consolidation zones indicator, which is another free indicator on the TradingView community to identify when the market may be in consolidation, and our SMC indicator, which I use to identify the current swing low and current swing high of all times as price moves in the way that it moves. Okay, so I want to give a couple of examples based on how Q line looks that will dictate an entry and where you can potentially place your stop loss. Now, as I've said before, I want you guys to keep in mind this is going to be based on what your account size is. Most of us, or the majority of us on a Discord, are prop firm users, whether it's Apex, Blue Sky, My Funded Futures, Top Step, Take Profit Trader. So, again, I'm giving a guide as to where your stop loss should be, but you got to keep in mind based on what I'm showing you. If you feel like the stop loss based on where we place it according to Q line or Q cloud is too big for your account, then you either need to adjust what your entry is so your risk is smaller so you can tolerate that stop loss, or you just make it slightly smaller, right? Um, we just want to make sure that we're in alignment because we all have different accounts and we all have different risk tolerances. Some people can tolerate just to give a more detailed example, my default stop is about 28 ticks or 7 points. So if I'm doing one mini contract, um, every loss that I take would be roughly about $140, presuming that there's no slippage. And that's on one contract. If I chose to do two, three, or four, you basically would multiply that number. So two contracts on NASDAQ is $40 a point, three contracts is 60, four contracts is 80, so on and so forth. And if you were doing ES, you know that one contract mini is $50 a point, two is 100, so on and so forth. So you just got to keep all of that in mind. Make sure that you know your numbers for the amount that you get in profit as well as loss. That again will help prevent you from becoming emotionally overwhelmed whenever you um, take any losses, and you're just able to calculate, the number that you take per trade, so you can figure out the maximum number of trades that you can take per account, whether you have an account that gives you a trailing threshold or whether you have a static account that's just a flat number. So, okay, so enough about that. Housekeeping things here. What I want to highlight, just want to highlight a couple trades, and I want to highlight this one specifically here. This is a good example. So I'm going to zoom in this a little bit more so you guys can see the details of the trade, right? So you see we're coming off this great push up here, and it's reflecting Q line buy because it's trending up. Our buy Q line was way back here. So it went up, price went up, had a quick Q bear wave, but that was brief as we continue to push up, push up, push up. And then we peak at about 19,338.50 before we start to push down. Now, we are able to detect that we're starting to push down. Why? Because Q Cloud is fully stranded here, but you begin to see some change in the indicator, right? It's beginning to fully form here, right? So we get the sell Q line and it's flat here, but then bends toward here. So optimal entry is going to be when we're under Q line, whether you choose it at 19,326 or 19,322, right? Just depending on how fast price is moving at that point is what we want to consider entry. So we take this trade, let's say hypothetically, we wait until we get about three different wrinkles in our favor, which would be actually several different ones in our favor here. But if we're presuming Q line to take trades when we're under it for a sell or above it for a buy, let's say we wait 2 or 3. So if we take it at 3 to, let's say at 324.50, right? We take this entry. My stop is typically 7 points above that. So my default stop would be about 331, right? So this is a few points above Q line, and we know Q line is a trend tracing tool. So why am I comfortable taking this trade here and wanting my stop to be here? Well, let's just say we've gotten the sell Q line, we've gotten the Q wave bear. Let's say for whatever reason, price just, instead of pushing down the way it does, pushes here and then it pushes back up and pushes back up. Well, we've broken our trend uh, toolkit, which is Q line, right? So if it's told us that we're starting to go downward, but for some reason price goes upward, you want to get out of the trade once the trend breaks. So if we've taken this trade about here, and then instead of going downward in this manner, we begin to push upward, this can be your default organic stop loss. Even though mine is a little bit default here, I start to push past 327 after taking an entry between 324 and 322. Then, I'm on alert mentally, knowing that initially my reason for getting in this trade is because we thought at the time we were going to break a new trend, but it just so happened to reverse on us and we pass, I would call our organic stop loss, right? So I have a decision to make. If we get, let's say, the 329, do I stick with the trade and see it through and wait till it hits 331, or do I get out early? One of my reasonings for getting out has crossed, which is Q line. The other reason would be cloud. And so I'm going to give an example of what that looks like with cloud, right? So we go down here, nice, great trade, and you see the Oracle ultimate reversal is letting us know that the volume of this trade is going so fast that we probably are ending at some point. And what happens? We begin to push up. We push up. It's kind of difficult to see because of the cloud there, but you can see green Rinko, green Rinko, green Rinko behind these cloud indicator. So we start to get Q cloud forming from red. It was fully red and starting to form green. So this is another sign of getting out of a trade, right? Q cloud gives you defined entries and defined exits. It's one of the indicators that lets you know that if that happens, you need to consider exiting. Now, just for purposes of identifying this specific trade, if I would have gotten in at about let's say 324, right? From 324 to 306, that's roughly about 18 points. 18 points times 20 gives you about $360 on the contract. So you have $360 in profit before you get this push up here. So, we have a decision to make. We haven't gotten any additional, and just sidetrack, I'm trying to explain how this trades look just to give you an understanding of why you would consider sacrificing this push up for what ultimately would be such a long push down, right? So this is a brief push up. We're 18 points in profit. You can consider staying in this trade if you keep faith with the indicators and nothing has changed. We're still in a downward trend. We haven't identified a Q wave bull in this area. So you have a decision to make. Do you stay in this trade and go through what I would say is profit giving back as this pushes up before it begins to push down, kind of pushes up again, cloud begins to form all green again. So again, this is one of the signs of getting out. But what we do know is that we're touching Q line. We haven't completely crossed through yet. And then as you can see, we get like just a long push down. So uh, in short, taking this trade, you would have taken this trade again, hypothetically, if you've taken it at the trend at 324, this peaks at about 245, right? So that's a nearly 100-point trade. So your options could have been to get out of this if you're not trying to give anything back and then see how it goes. And it comes down again, pulls back up again, and then proceeds to go down. So you could have gotten in again here. Again, if you get out where Q line or Q cloud rather is showing potential bullish activity before it pushes back down. Um, so again, those are some of the ways to identify a stop loss with Q cloud and Q line. I want to give one more example here, and I want to give a bullish example since the first one was a bearish one. Okay, so this is a good example here. Okay, so with this long push down, right? We get, again, oracles, ultimate reversals. You see the flags here and the flags here, and then we also get a squeeze. We got to remember, squeeze under price means that it may push up. Squeeze over price means that it may push down. So a combination of getting an ultimate reversal under and a squeeze relaxer, for all intents and purposes, we should be going up. And we have a Q momentum green bullish dot here. So for all intents and purposes, we're going to go up, right? So we remain patient and we begin to get a Q wave bull alert. And more specifically, we push above Q line. Now, again, what is Q line? Q line is a trend trading tool. So I want to zoom in just so you guys can see this again, the details. We got by Q line. Now, this is I don't want to say weird, but the way that this formed, I would only consider a stop if we got in on this Q cloud right up. I would consider my stop here. You don't want to be way up here and then say your stop is right here, right? Because that's so far down. So if you would have entered on this, excuse me, on this translucent Ringo here, this is difficult to see. So let me zoom in for you. So it's about 193425. My default stop would have been probably about 317 because again I have a 7-point stop. But again, if we take the trade here and for some reason price begins to break 323 or 321, then in my head I have alert, to let me know that we're breaking the trend that I thought was going to be going upward, but we're going downward. So I can consider getting out of this now because we've crossed back under what was a bullish Q line, or I wait it out and see if it hits my default stop, which is way back at 317. But as you can see, taking this trade at about 325, we get a nice push up to 334 before coming down a bit, push back up to 338. We get a squeeze, come back down a bit. We form a little bit of Q cloud there, but not enough to let us know that it's going to be a new trend downward. And so we keep pushing up, down a little bit, and then we get a great big push up here before we eventually peak at about 382. So this is another trade, 325, 382, another 50 to 60 point opportunity. Again, on one contract, 60-point trade on a mini gives you $1,200 on NQ. And for a trade to perform that well, you may consider adding on to your position when we had some pullbacks here, a little pullback here or pullback here. And if you're wanting to use a tool that gives you pullback information, we consider Q grid, and you would see several different opportunities. As you can see, Q grid aligned with the Q line trade, and it identified entry, entry or additional position adder here, entry or additional position adder here, entry or additional position adder here. And we stayed with the trend this entire time. So this 60-point trade with one contract potentially could have been a 60-point trade with three contracts. And at that point, instead of making $1,200, it could have been 2,000, 3,000, even $4,000, just depending on if you added it precisely at these points. So, all right, guys, a little bit longer of a video than I thought, but I just want to give a couple of examples here of what it looks like to identify a stop correctly. So when you're in a trade that you see is in your favor and it goes against you, you don't want to be discouraged, but you do want to have proper risk management, so you're just not giving away too much of a trade, right? And again, although I do have a 7-point or 28 tick stop loss, I do consider when I get in an entry, if a trade goes against me, when I take it when it's above Q line for a bullish trade, or below Q line if it's a bearish trade, right? You can use that as an organic stop loss. If you take a trade and it's going downward, but for some reason it pushes back upward, we cross this trend, we can consider getting out. So we have um, minimal loss. And more specifically, you don't have to be married to any trade, because you can always get back into a trade at any time. Um, always can get back into a trade at any time as long as the account is healthy and has not crossed the threshold. So I hope this level of detail helped you guys. Again, we're going to continue to make these videos for you all, just so we can make sure that we're taking the best trades possible. I hope this detailed helped you guys, and I hope you had a great trading day today. You have a great rest of your week. Again, this is Michael Jones from the QuantVue Discord community, better known as Iceberg. Talk to you guys soon. Take care.